Hi everybody, it's FIBO Group and you are watching to the Market Watch review. MSCI's broadest index of Asia-Pacific shares was 0.7% lower than the previous year. Early trading on Thursday saw mixed results for European stock indexes. While the STOXX 600 index was unchanged, Germany's DAX gained 0.2%. Wall Street's major indexes were weaker Wednesday with the Nasdaq closing at a 2022 low. The US dollar index fell 0.2% to 104.130, while the euro rose 0.4%. The British pound rose 0.3% to $1.2055, while the Japanese yen greenback fell 0.6%. As the US dollar strengthened and Treasury yields fell, gold prices rose on Thursday. Spot gold rose 0.2%. Oil prices fell due to uncertainty about China and central bank rate rises. Asian Pacific market. China's health system is now overwhelmed following the country's recent reversal of its testing and lockdown regimes. For travelers coming from China, the United States, India, and Italy, as well as Japan, Taiwan, and Japan all announced that they would need COVID-19 testing. Japan's 20-year government bond yield rose to its highest level since 2014 after the Bank of Japan unscheduled emergency bond buying early in the session. Within the yesterday's range, the US dollar is correcting towards the Japanese yen. The Aussie fell down and tried to get a foothold below yesterday's low. Market of Europe. The Federation of German Wholesale and Foreign Trade stated that German exporters are optimistic about next year. They anticipate problems at key customers in China due to rising COVID infections and rising costs, making U.S. buyers more cautious. While the euro hovers within the range, sterling has risen higher after trying to fall towards the $1.2 support level. Exports increased 14% last year, while imports grew 17%. This resulted in Germany having a lower trade surplus for the fifth consecutive year. The benchmark European contract for natural gas futures, the Dutch Tidal Transfer Facility, has seen front-month natural gas futures plummet to below €77/megawatt-hour in recent weeks. Market of America. Many investors predict a recession in 2023, as the S&P 500 is poised for its largest annual decline since 2008. The market was pricing in a 71% chance that the U.S. Federal Reserve would raise its 25 basis rate by February. Rates are expected to peak in 2023's first half. The U.S. weekly jobless claims numbers are due later in this session. The resistance zone for the U.S. dollar was located at the 1.36 level in relation to the Canadian dollar. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.